Hello, everybody, and welcome to the latest Sharesify podcast. As usual, I'm joined by my colleagues Stephen Fraser and Ian Conway. Hi, chaps.
Hello.
Hey, James.
Now, this week we've seen the biggest bounce in the S&P and Nasdaq in months. Then our friend Donald Trump rattles investors again, and the US looking like it could see some steep declines when things open. But then, what do we always say? Stay calm, stay invested, and if you've got cash, maybe when you're happy with positions, maybe add. And over the
Yeah,
long term, it's that old mantra: timing the market beats trying to time the market.
yeah, absolutely. Yeah, and I mean, we all know Donald Trump is such a loose cannon. We were just talking before we started recording, obviously, about how US stocks have had this pattern recently of rallying midweek. Into the early part of the week rather, and then Donald Trump comes out and says something rather controversial, and everything goes takes a tailspin Thursday and Fridays. We haven't got a Friday, so maybe that saves some of the worst
Yeah, yeah. It's
for US
funny.
declines.
I
But
saw someone on social media said it's the Strait of Hormuz pattern. It does that,
yeah,
goes up and comes straight back. I mean, interesting. Steve, you'll know Marco Kolanovic. He used to be chief strategist at JP Morgan, a bit of a market mover, and he's actually questioned whether that huge rally we saw was actually anything to do with Iran, or whether it was just like positioning by pension funds at the end of the quarter. And he put a tweet out saying the rally gives bulls some reprieve and bears a better entry point to sell, which is charming, isn't it? The one thing I did notice actually, how it's saying that, is that short-term treasuries didn't really move on it. And I
yeah,
think if it had been a sort of macro, if it had been like the
yeah.
macro was looking better, you probably would have got more of a move in treasuries. But look, who knows? We've got a long
I mean,
weekend
I do
coming
think
up.
it was interesting. Some experts have pointed out that there wasn't massive volumes to support that rally, so it might simply have been a reaction to short term news, which suggests it might have been that it probably was the Trump comments about ending this conflict that sent things higher. But it also suggests as well that there's capital that's been removed and it's pent up demand there. It's waiting to take positions when this conflict does eventually find some kind of stability. So, we watch and see. Strategists, though, they don't care. They get paid whether the market goes up or goes down, right? So,
Oh, absolutely. Tell me about it, mate. Used to be one. It's a great job. James, what's grabbed you then this week?
Yeah, in terms of companies, well, we can't ignore Unilever, can we? Merging its food business with McCormick. And that was a Marmite deal in more ways than one because the shares in both
yeah,
companies fell. So I don't think it's less of a clean exit for Unilever than perhaps investors hoped. And elsewhere, we had another upgrade from Debenhams, which of course is the renamed Boohoo. Iron brew maker AG Bar enters the year with good momentum, and that's on the lookout for more deals. And just in terms of investment trusts, we had RTW Biotech, which delivered a very healthy 2025 performance and continues to benefit from lots of takeovers.
yeah. Interesting you mentioned about investment trust change because you and I we had a great conversation with Laura Fowle of Law Debenture, and
Yeah,
it's a really interesting investment trust. I mean, it's got this really unique model. So if listeners have missed that podcast, please go and check it out in that podcast section. It's there for anyone. Really fascinating take on the investment trust space. Yeah.
I mean, for me, Steve, funnily enough, is one of yours. It's Raspberry Pi,
Yeah.
which has been listed for a year now. Really interesting. It was a small beat across the board, but when they in January they said that the second half outlook was not very clear because of this DRAM shortage, which obviously we talked about before. But actually, they said they think that's more of an opportunity than a threat. Well, investors loved it. The thing was up like 45% on Tuesday, and it
Yeah.
went up again yesterday, another 10%. I thought that was really, really interesting. And they're talking about becoming a two franchise business. So not just the
Right.
circuit boards, but their own chips. And, it's gone from being this sort of hobbyist thing where people are just making PCs at home and, to actually these things are embedded in all kinds of things like lifts, moving walkways, yeah, big lighting displays, and all sorts of stuff. So manufacturers OEMs are incorporating this stuff increasingly, and as I say, they think this DRAM shortage could be an opportunity for them. Who knows?
see how it plays out. I mean, certainly there's so much action going on in the memory space, and DRAM being a massive part of that dynamic. But they've sold off massively, and during this most recent kind of sell off. So there's lots of analysts talking about bigger upside potential for memory chip makers. I mean, I was noticing Barclays talking earlier in the week. They put out a list of companies, 350 companies that they thought would make really interesting recovery stocks and good opportunities. And there was the Q1 winners and losers that you'd written about, Ian.
Oh, really
who are the
interesting
big winners
mix.
and losers?
Really interesting mix there, Steve. Well, no surprise, energy companies did well, and that was FTSE 100 and 250. But more, I mean, and no surprise, because I know I've been banging on about it, but house builders were terrible. And we had we had this week a strategic update from Barclay Group, which was just basically saying, we're not selling any houses, so we're going to scale the production of houses. We're not going to invest in any more land, because there's just no point. We can't monetize that because planning restrictions and regulation and costs and all this sort of stuff. So builders have been terrible Q1. Staffing companies have been terrible Q1. And then when you go to the FTSE 250, the FTSE 100 is still up. It's above 10,000, and it's still up 4 or 5% this year. FTSE 250 is down 4 or 5% this year. So there's definite dichotomy between the large caps and the small caps. And even though smaller cap energy stocks have done well, actually some of the smaller cap tech stocks have done really poorly. Which is, it's quite tough when you look through that list. And media companies. And talking of which, Future. Now, this has come up before on that list of most shorted stocks, which I've been running, and I've just going to have a look at those and put something out next week, an update, because I've got the US most shorted as well. So Future came out and it warned about something that I'd never heard of called Google Zero. So this is the point where Google stops being a search engine and becomes an answer engine, because it's got the AI overview at the top. And what they said is, they thought that the shift would be kind of slowly. It's been really rapid. People are now no longer having to click through to paid adverts or external websites on Google. They're just taking what's on the AI overview. And apparently that's had a really big effect on their business. So they warned, stock got absolutely flattened. I thought that was really interesting.
If you just do a search on Google now, and you'll get Gemini giving you its scrapes the internet and gives you answers. So it's I question about. I think Gemini Copilot they look a fair bit behind ChatGPT to me, simply because they're just scraping internet. They're not really. I don't think they're adding as much AI intelligence as they sometimes perceive themselves to have. But what happens on that search space will be really fascinating to watch. But it's just acronym hell again, isn't it? SEO goes to AEO.
I know. And the other one I thought was really interesting is actually just out this morning, which is McBride. Now, they made an acquisition, so that's okay. Now, that's all part and parcel of the business. But what they said, current trading was absolutely fascinating. And I'm wondering if this is the canary in the coal mine, because they've said, because diesel prices have gone up, haulage prices have gone. So McBride, for anybody who doesn't know it, makes washing up liquid, it makes dishwasher tablets, makes laundry tablets, white label for the big supermarket groups, right? Now this is, you think about it, this is a daily or weekly, people are buying on a weekly basis. It's a repeat small ticket item. Now they said they haven't seen any change in sales activity, but diesel costs have shot through the roof. So haulage costs have gone up. They said petrochemical prices have gone up and packaging prices have gone up. So they've started to pass those on to the customers. They've told the customers, we're putting prices up. And the most interesting thing is they said, we're starting to see strains in the supply chain.
Exactly,
And this is a month. It's only been a month. And I think this could be the canary. Could be
UK
the
GDP
canary.
figures of 3% inflation and stuff into real contrast, because when we start getting read-throughs into March, I think we're going to start to see the impacts. We haven't really seen the impacts economically yet in
No.
data points from this dust up in the Middle East. So there's definitely going to be a toll to be paid.
Yeah, and we haven't actually seen it coming through. Few companies have actually been, given that kind of first-hand account. So I think we're going to see more of this and potentially more profit warnings coming from companies.
I mean, it's absolutely dead next week, so there's not much to look forward to. But I know, James, you've been looking forward to some a US firm. Who's that?
Yes, we've got SHEL, one of those big FTSE first quarter winners, and also across the pond, Constellation Brands, which is the maker of Corona Extra and Modelo. So they've got their results after the market on Wednesday. Lots of interest in the booze space, given the Pernod and Brown Forman merger. So we'll keep an eye on that one.
Yeah, and Cheryl, you mentioned, I mean, Ian, you were looking at it the other day. I mean, I suppose the big question is talk about windfall taxes on their profits, because that's going to be very much in the target zone of investors.
I think it is, and I think that you can imagine that there'll be a consumer backlash against the high prices at the pump and so on. But everything's all the divisions, I would imagine you're going to see them beating forecasts for Q1 when it comes out. These are not the results. This is just kind of guidance for Q1.
Right. Yeah.
So I've put a table together. We'll put it out later, James. The look ahead for next week. So there's a table in there of what full year forecasts are, but I think we can safely assume that those are going to get bumped upwards with the oil price,
Yeah, but I mean, I suppose this is a market management situation, because it won't want to be talking too positively, because it might be a bit of a political hot potato. So we'll see how they pitch their tone.
Well, the one thing that that Sawan is going to say, the CEO, is that it's non-negotiable that they will pay out between 40 and 50% of operating free cash flow. So, shareholders will be looking forward to that, that dividend check coming through the post, and B, the share buyback, because they're still going on share buybacks. Don't get me started.
Yeah. Anyway, that's probably about a wrap for today's podcast. Ahead of this long weekend for everyone. Happy Easter to everyone. I hope you have a great break. Join us again. We'll be back on Tuesday. We'll have a podcast likely on Wednesday. Get in touch with us as usual. Sharesify editorial at sharesify.com. Drop us a line, your thoughts, your opinions, your questions, and we'll see you next time we see you. All the best.
Take care.
See you later.